Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody had a great green day in the market. You know I wish the best for my viewers and subscribers. Speaking of subscribers, if you hadn't hit the subscribe button yet, go ahead and do that. I post videos on my portfolio Monday through Friday, and if you enjoy consistency here on YouTube, I'm trying to be one of the most consistent financial channels in the space. So I'm trying really hard to stay as consistent as possible, and if you do appreciate that, make sure you hit the subscribe button and leave a comment down below about what your favorite stock is. So guys, today we're going to go over the overall portfolio, the individual holdings, the watch list, and then my growth stocks. So for today, we're down about $450. For the week, we're down $361. For the month, we're down $756. The month, we're down $2,266. For the year, we're down about $1,500, and all time, we're down $530.99, down 2.6%. Then we have buying power of 1638. We're going to jump right into the individual holdings, starting with the Dividend Aristocrat in Realty Income. We have 15 shares, $880 of market value. Average cost is $45.38. 4.4% of the portfolio is in Realty Income, up over $200, about 30% up on Realty Income. Then we have Altria. We have which is a dividend king. We have 149 shares, $5,500 of market value. Average cost is $43.61. 28% of the portfolio is in Altria, down about $950, down 14.5% on Altria. Then we have Coca-Cola, another dividend king. We have 20 shares, $994 of market value. $51.26 is our average cost. About 5% of the portfolio is in Coca-Cola, down $31.30, down 3.05% on Coca-Cola. Then finishing out with Realty Income, with Federal Realty Investment Trust, down to $70. We only have one share of this Quality King. 70.21 is our market value. Average cost is $113.40. 0.35% of the portfolio is in FRT. We're down 43.19, down 38% on Federal Realty. Then we're starting off with the next set of months with Lowe's, a dividend king. We have two shares, $330 of market value. Average cost is $100.86. 1.66% of the portfolio is in Lowe's, and we're up $128.56, up 63.7% on Lowe's, and a nice dividend of $1.20 coming in there. Next is an Aristocrat in AT&T, about $27 a share, 126 shares, $3,300 of market value. Average cost is $29.68. 17% of the portfolio is in AT&T, down $352.75, down 9.43%, and a dividend of $65.52 coming in. Next is AbbVie. We have 60 shares, about $5,000 of market value. Average cost is $72.22. 25% of the portfolio is in AbbVie. We're up $622.64, up 14%, and a dividend of $70.80 coming in from AbbVie. Then we have People's United, a dividend aristocrat, 13 shares, $138.32, 10.8%. $10.80 is our average cost. 0.7% of the portfolio is in PBCT, down $2.08, down 1.5% there. Next, with 36912, we have J&J, dividend king. We have two shares, about $300 of market value, about $280, 135.79 is our average cost. 1.43% of the portfolio is in J&J. We are up $14, up 5.2% on J&J. Then we have 3M, another quality king. We have two shares, $320.75 on market value, $147.28 is our average cost. 1.6% of the portfolio is in 3M, up $26.20, up 8.9% on 3M. Next, we have Walgreens. It's close to dividend king status, I believe about 5 or 6 years away. We have 6 shares, $215.82 on market value. Average cost is $39.92. 1.08% of the portfolio is in Walgreens, down $23.67, down 9.88% on Walgreens. Then we have ExxonMobil, which is down to $32.74. We have 84 shares, $2,700 of market value. Average cost is $53.20. 13.8% of the portfolio is in ExxonMobil, down 17.18, down about 40% on ExxonMobil. Then we have Aflac, my financial my insurance company. We have one share, 36.21 is our market value. Average cost is $35.75. 0.18% of the portfolio is in Aflac, and we're up 46 cents, up 1.3% on Aflac. So right now, the best deals in the portfolio are obviously FRT is down huge. AT&T is below $30, which is my $30 is my goal price, so that's definitely a steal. And then ExxonMobil is below 35, which is phenomenal. That's down $20 from where I bought my shares for my average cost. So definitely a good price there on ExxonMobil in my opinion. Then we're going down the watch list, starting off with Cisco at 57. So we have about $20 of upside in that stock. Definitely buying it there. PepsiCo at 139, not quite enough upside. Kimberly Clark at 134 is definitely a buy for me. About 20, a little bit more than $20 of upside. Good quality king there. Or actually, I don't think they're king status. I think they're really close. I think they're at like 47 or 48 years. I don't think Kimberly Clark's a king. I think they're still an aristocrat. Then we have Colgate at 78. Not enough upside. Procter and Gamble at 142. Still not enough upside. SX Properties is still at 300, so below 2 is a definite buy. Black Hills at about 60. We have $30 of upside, $37 of upside there. 60, 70, $27 of upside, so about 30 there. Definitely a buy. Mickey D's at 222, not enough upside there. I need it down to like 210 to 215. Apple at 114. I would buy it at 120, so definitely a buy here. Sorry, at 116. And then at 122, it is a definite steal at 153 at the high. About $20 of upside in the stock there. So definitely a buy. So as for the watch list, Cisco, Kimberly Clark, SX Property Trust, Black Hills, Apple, and Disney. So a lot of buys today. Jeez, the market just got slammed. Look at that. We're down huge today. But again, guys, market fluctuation is part of the game. When you see green days, or excuse me, when you see days where they're above your average cost, because again, this doesn't really reflect my portfolio. What does is my average cost. So it just means that the stocks that I have the most amount of shares in are down. That's why I'm down so far, because I'm very focused. This is why diversification is super important, and I know I need to be better diversified. As you guys saw, MO, AT&T, and ExxonMobil are all down, and those all equal out to be about 20% of the portfolio. So 60% of my portfolio is down right now. Again, I'm not super worried. I look at this as a cost down average opportunity to buy quality companies that I wanted to buy anyway. But just for newer investors, just so you guys have a little peace of mind, this is part of the game, right? This is part of investing for your retirement. It's going to fluctuate. The good thing about this is I'm not currently dependent on this money. I just want it to grow. So as a dividend investor, it's important to remember that when the stocks are above our average cost, we don't want to buy them anyway. So it's actually bad for our portfolios when the stocks are at all-time highs, because that makes it so we're not comfortable buying them, right? If the stocks keep going up, then our yields are lower, and it's hard to find a deal or a value stock that pays great dividends. So when the market does something like this in a day where it's down, my portfolio is down $400, that doesn't bother me because I know that this is a long-term gain or game. So it doesn't bother me what it does day to day. I could care less. I'm looking to retire in like 40 years. I'm turning 25 this year. I have 40 years before I'm supposed to be able to retire, and with this portfolio I'm hoping to do it at like 42. So I'm thinking in like 20 years I can retire. So I really don't care about the short-term fluctuations. In fact, here's the way that I look at this. If 60% of my portfolio is down, that means I have great opportunities to get into quality stocks and hold them at those quality prices. So what the reason I'm down so far and I'm so concentrated in those, and the reason I'm not as diversified as I would like to be, is because the stocks that I am in were deals when I bought them. Right? They were good deals. I cost down averaged a lot. I poured a lot of money into those stocks because they were down. Now the same ones are down even further, which to me signals an even better buying opportunity. I mean, once I get my money straight and I get, I'm back into working. I do actually have orientation on Friday, and I should be starting Monday. So, a couple weeks out, mid-November, I'll have good money coming in again, and I'm going to be focused on saving for a few months. But once I get my emergency fund back up, guys, I'm going to be pouring money into it. I am kind of bummed out that I can't take advantage of FRT being down and AT&T being below my average cost and ExxonMobil getting slammed, but that's part of the game. I 100% acknowledge I'm over leveraged to the stock market right now. I don't have enough money in savings. I went way too crazy with investing because I understand the value the money that I have right now is going to be more valuable in the future because I make more than 3%. I beat inflation year over year, right? So for me, I got so focused on investing that it's my Achilles heel. Like I kind of shot myself in the foot because now I'm kind of struggling financially, but I understand why I did it, right? My goal is to build passive income. My goal is to be able to retire before everybody else. Like I was explaining to my parents, like if I keep this up, of course I need to save first, right? So that's what I said. My goal is going to be to get my savings up, but once that's in place, I'm gonna just run. I'm gonna go with gazelle intensity. I'm gonna attack like a lion, like biting down on prey. I'm gonna go so ridiculously intense with this that I'm gonna retire before my goals. That's the point. So guys, when you see a red day, and everybody keeps asking me, am I freaking out about Exxon or Altria or whatever? No, I don't care. This is a 40-year like game for me. So I'm playing for such long term. Like even if Exxon goes under, I don't care. If it cuts its dividend, if it's not cuts its dividend, I'll cut it and I'll pour it into something like Walgreens or Johnson and Johnson. I don't care. So remember, guys, as dividend investors, this is a long term game, and I'm looking 40 years ahead from now. So I'm not super worried about the day to day. In fact, like I said, it's important as dividend investors that if you get nervous or you get freaked out about a big drop like what you're seeing in the portfolio right now, look at it as an opportunity. Because 20 years from now, I'm not going to care about what happened on a random October day to my portfolio when I was 24 years old. I'm not going to give a shit. It's not going to bother me. So, if you're struggling, if you're a newer investor, just try to adopt that mentality that red days are buy days. It's not a bad thing. I didn't lose any money. I didn't sell. So the value is still there. I just have to wait for the stocks to go back up. Or if I have the capital, I need to allocate it properly so I can really lock in those deals. So, anyways, guys, sorry about the rant, but I just wanted to clear it up because I keep getting DMs on Instagram and comments on YouTube about how do you feel about this stock or that stock? How do you feel? I don't care. On a day-to-day basis, doesn't bother me at all. I don't lose any sleep over it because, like I said, it's a 40-year game for me. I'm playing this long term, and guys, the thing is, the cash flow that these stocks are paying me right now could pay for my internet and my utilities every month. But the goal is to get them to pay for everything. So I'm just gonna keep allocating cash once my emergency fund is built. I'm gonna be going at it with a gazelle intensity and hopefully putting like $1,200 to $1,300 in the market every month. That's the goal. But anyways, guys, thank you so much for watching. Sorry about the rant, but I have gotten a lot of questions, so I wanted to cover it. But thank you guys so much for watching. Remember to hit the subscribe button and hit the bell icon so you don't miss any updates. Remember, I post Monday through Friday. I know this was a little bit more lengthy, but it's really important that I get that message across. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.